All right, guys, this is Paul Singh, market speculator with bullsonwallstreet.com with the free weekly swing trade report, Saturday, June 5th, 2021. Today, we're going to go over the market indexes, three market indexes that we watch: SPY, IWM, and the Qs. We are going to go over the top 10 stocks in each of these indexes, which is going to give us a good idea of what industries are leading as well, and should give us a good idea of some stocks we should be watching for the following week. And this will also help us set the tone for the coming week. And then we'll go over a couple of current positions we are in with the Bulls on Wall Street alerts. So let's get started here. Let's look at SPY, the usual drill here. We did this a couple of weeks ago, and then also had the coffee with Paul last weekend. And what did we say? May was basically a very volatile month that ended essentially doing nothing, because it got back by the end of the month to where it had began with this volatility. Now, as we get out of this volatility and we are getting to new highs here this week, which is a positive result, because it was getting shaky here. We very well could have turned over here and maybe put in a short-term topping pattern. That has not happened. Now the market is looking much healthier. And we were actually predicting this would happen when we were talking about our market breadth, what RSP was doing, and we'll talk about that in a second. But pulling this thing back to the March 2020 pandemic low, this is the theme we have been seeing. We've been seeing these deep pullbacks that end up usually making higher lows that are a little scary when they happen, but then set us back on trend, and we also end up getting higher highs here. This is, what a strong uptrend looks like. Usually there are some scary points in there that make for a nice continuation pattern, and that looks like what happened here. So unless the market turns over here, we are getting the higher lows, and we're probably going to get a higher high here. So the SPY is looking very healthy here, looking very strong. Now, RSP may be lagging a little bit. And again, for those of you who don't know, SPY is the biggest and the best 500 stocks, right? But it's not equally weighted. Apple weighs the most at about 3%. If they're all divided equally, they would be worth 0.2%. RSP makes everything equal. Apple is worth no more than IPGP, which a lot of us don't even know what it is. I've never traded this stock, a semiconductor stock. So, I like to look at the equal weighted, and notice here, and this is part of why we weren't as concerned with the market rolling over. We were seeing good market breadth indications. One of them was look at RSP. RSP didn't pull back as much as SPY did. SPY had hit its 50-day moving average. RSP did not. Now, maybe RSP is a slightly weaker than SPY, but it's really no big deal. The overall strength still looks very strong. So I would say that the market looks very strong here, at least from SPY's perspective. Now let's look at the top 10 holdings, not holdings, but performers over the last week, over the last 5 days. Now, one thing that should jump out at you is all but two, so 8 out of 10, oil and gas. Energy is on fire. It is leading the market. Even last week when things got a little bit shaky in this pullback, energy did very well. And look at all these stocks: FTI, DVN. Look how strong these charts are: SLB, MRO. And then we've got semiconductor stock NVIDIA, which semiconductors are also very strong. I would definitely be paying attention not only NVIDIA, but which is a little extended to enter now, but semiconductor stocks. And looking for oil and gas, I would be looking for oil and gas stocks that are, if you're not in it already, which probably should be if you're paying attention, and we've been talking about it. But if you're not, look for the ones that aren't too extended, like Oxy here still has room to the upside. If you're trading it longer term, there's still a lot of room to the upside. Look at where like on Oxy, the pre-pandemic high was 42, and that's before it had already been in a downtrend. So a lot of room to the upside on these things. Here's Halliburton. There's a bunch of others you can be following, and even the big, the big guys like Chevron here, which is not that extended here, or BP and a few others as well. So definitely be paying attention to oil and gas. A couple other areas I definitely would be paying attention to: definitely semiconductors, definitely retail, and definitely industrial metals. Like here's NUE, which is the 17th best out of 500, but industrial metals very strong as well. Okay, let's move over to more tech heavy cues, And if we see the Qs, again, looking at this longer term pattern, higher lows. The dips are being bought, and that happened again. And the Qs were looking very shaky. Market breadth was actually looking pretty bad too, not like SPY. And if we look at QQEW, also looking strong. So Qs are healthy. Now, not back to the all-time highs that SPY was, but part of that reason is it dipped more. SPY just barely tagged its 50-day moving average. Qs went way below it, so it takes more to recover. But the higher low is in, so that's a positive. Now, let's take a look at the best performers in the Qs over the last 5 days. Here we have software, biotech, semiconductors. First thing I like to do is look at the industries. We have more specialty retail, biotech, software, semiconductors here. And then here is broadcasting. So kind of all over the place, but you'll notice, again, retail and semiconductors, definitely areas you should be paying attention to. And software is a mixed bag. But let's take a look at the stocks themselves. DocuSign is interesting because it was looking kind of toppish, like it might roll over, like some of the other at-home plays of 2020 with the market with the economy reopening. A lot of the at-home plays have been doing poorly. DocuSign made a nice comeback. Is no longer a potential short setup for now, unless this were to fail. But we're seeing a breakout and potential continuation pattern. mRNA, of course, one of the big vaccine makers. Numbers came out last week saying, I think something like worldwide, only 15 or 20% of people have gotten it. Very different than in the US. So still a lot of room for these companies to make money, mRNA and Pfizer and that type of thing. So mRNA broke its all-time high after making higher lows. Could be setting up for another big run. Talked about NVIDIA already. 2 retail stocks, PDD. This was looking kind of toppish. But if it remounts the moving averages and starts to show strength, I think it could be a long play. eBay looks very strong. BIB, biotech, not a pattern I would take. This trade, this is just like even though it led last week, this looks like just kind of a jumbled mess here. Into it, software took a really big beating. Just look at IGV. Here, you can see here it had made a high. This is by the way, the software index and ETF, and it was at 386, went all the way down to 328. But in that time period, Intuit has been going up and is at all-time high. So definitely a leader, relative strength leader in software. DXCM in diagnostics, tough to say. I wouldn't put this on my list to trade right now. And then XLNX Semiconductors, we've been watching this stock, made a little bit of a higher low, back up over its moving averages, and a very good risk reward. If semiconductors move, this thing has a lot of room to the upside. Siri for multimedia broadcasting, not much of a pattern here, even though it led last week. So that is the top 10 in the NASDAQ. And now let's go to small caps. Remember, we always want to see small caps doing good in a strong market. Basically, 2021 has just been a big consolidation range for small caps. Here, high around 234, low down to about 210, and basically trading back and forth in that range. And, it was looking very shaky here, but now has rebounded the moving averages again. Looks like it could be setting up to break out of this big box here, which could set up, and look at what happened. 2020, we had a 6-month kind of consolidation. Then once it broke out of that box, huge run. Maybe that happens again, and that would be great for the market. I don't have actually, let's just do it this way. We'll do this. We'll do, now this is the Russell 2000. We're going to take a small cap 1000, which is going to give us something very similar, and filter it again for the top 10 or top over the best performers over the last 5 days. Number one, meme stock AMC, huge short squeeze here, has pulled back quite a bit from the high of, it looks like a natural pullback, but then when you look at the actual numbers, 73 down to 47. So really big pullback, even though it doesn't look like it. So we'll see where this ends up. I think at some point this is going to be a fantastic short, just like it was here, when it went from 19 all the way down to 5. BB software, BlackBerry, this is another meme stock. So the top 2 small caps here are meme stocks, and I don't think any of the rest of them are. I wouldn't touch these to the long side, maybe intraday trading or like 1 or 2 day holds. Other than that, they're not really good, week long or a couple of week-long swings for now. Biotech, NVAX, overall pattern is interesting here. It's rebounding the 50-day moving average, has a good accumulation pattern. I think this could be a play. Maybe we're entering here at 185 and see if it runs to the high at 318. Is that right? Oh, 308. Wow. Maybe we'd go for a smaller target there. TRGP, oil and gas, DVN, oil and gas, CVE, some of the smaller oil and gas stocks here. Skills, electronic gaming. Electronic gaming has been very strong. This is a recent SPAC, but also EA, Activision, also very strong. Docu, we already talked about that one. BAK, chemicals, no surprise here. Industrial metals, energy, chemicals, all these areas have been very strong. And then another oil and gas filling out the top 10. So you can see some themes here. Oil and gas, metals, industrial metals, semiconductors, retail, and then a few other outliers, and then meme stocks as well. Led the market, not only last week, but have been leading for a while. No surprise here for our current positions. One of them is, we'll just go over two of our current positions. One of them is ERX, and it's, look at the overall pattern here. ERX is the leveraged ETF. The main ETF is XLE, so you can see here what the pattern is looking like. ERX gives you 3 times the leverage, so you can see here XLE was up 0.67% Friday. ERX was up 1.2%. Not triple leverage, double leverage. So you can see here a very strong pattern. I think we entered, I don't remember exactly where, somewhere in here. And sitting at 30, a lot of room to the upside. So we could have a really big target here. And we're going for a bigger move with ERX. It's not one of the 3 to 5 day holds. We're going for a bigger win here. And then Twitter, we entered into 56s off a gap down reversal. One of my favorite plays is when you have a nice strong trending stock that overreacts to something like earnings, which it did here, then it reversed. We got in around 55 or 56. It's sitting at 59 now. We were initially targeting the 50-day moving average. Maybe we'll even go for a break of this. Has a lot of, first of all, it was in a strong trend and has a lot of good news here coming out with the new subscription model. That might be a catalyst for the thing to run, and we were always looking for catalysts. We've got a few more positions as well, but these are the two we're highlighting this week. Next week, remember guys, we have the Coffee with Paul. That'll be on Saturday. And then, of course, check out Bulls on Wall Street, part-time swing trading service. That's where you'll get the daily analysis, focus lists of stocks to watch, and of course, alerts.